The Reserve Bank of Australia has kept rates on hold for their very first meeting in February for 2024. So what does this mean for expats, for investors, and for anyone with an Australian mortgage? Hi there, I'm Jarrad Brown, Australian expat financial planner here in Singapore. Thanks for tuning into the video today. Today we're having a look at what the RBA is going to do this year, what their meeting schedule looks like, and of course the most important question of all, when are we going to get these damn rate cuts that we've all been waiting so long for? So let's have a look at, first and foremost, what happened in the February meeting. So we've had the Q4 2023 inflation data out in Australia. That came in at 0.6% for the quarter, well below forecasts. And if you annualize that figure, meaning 0.6% multiplied by 4, that would give you an annual inflation rate of 2.4%, well within the RBA's target of 2 to 3%. Now, looking at the commentary and reading the minutes from the meeting that took place in February, highlights the fact that the RBA wants to see more consistent low levels of inflation. So chances are that really means that we're not going to get a rate cut from their March meeting, which takes place around the 19th of March, but we might get a cut in May, depending on what the Q1 24 inflation data actually looks like. What else is the RBA looking at when it comes to interest rate decisions this year? Well, a few things that they're examining very closely. Number one is the employment data. Now, unemployment is very slowly starting to rise in Australia. Part of that is being driven by very high levels of immigration, both skilled and unskilled, but we can't process the visas fast enough because we don't have enough staff to process those visas as quickly as the applications are coming in. So unemployment is very slowly rising, and of course the RBA likes that steady increase rather than a hard landing and rapid increase in unemployment. What they're also looking at is economic growth. We're starting to see softer and softer economic growth around the world. We will see more economies in the developed world enter a recession in 2024. But of course, we don't think that's really anything to worry about. And chances are that would be more a technical recession than a long-lasting deep recession or depression. But this is going to mean that the RBA potentially has another driver to cut rates further. Now, whilst it's not a stated objective of the RBA, they are very closely watching property prices as well. We have a cost of living crisis, which you don't need to look too far and wide to actually see the headlines when it comes to just how tough life is getting for the everyday Australian. And of course, just how difficult it is for younger Australians to get into the property market. So understandably, the RBA is watching property prices. If they cut rates too quickly, that will undoubtedly lead to a further strengthening in Australian property prices as well. So of course, they need to watch that one also. They need to watch unemployment. They need to watch economic growth, both domestically and internationally, and all of those variables get factored in to the rate decision. So as expats, what does all of this data mean? What does the RBA decision making actually look like this year? Well, under the RBA's new meeting schedule, they will meet 8 times throughout 2024. So a little bit different to the years gone by. But still we'll be getting those regular updates from the RBA. Now, chances are they will want to see at least the Q1 2024 inflation data out before thinking about making any rate cuts. So that might mean that we get one in May, or it might mean that they want to see the first 2 quarters or potentially even 3 of softer inflation data before we get those cuts. So chances are that it is very unlikely that we will see a rate increase in 2024. But certainly potentially that we'll get 1 or 2 cuts throughout this year, of course, depending on what inflation actually sees. So what does all of this mean? Potentially it means a bit of weakness in the Australian dollar. Good news for expats sending money back. Potentially it means that your borrowing capacity also sees a little bit of a leap. As debt decreases, as interest rates fall, your ability to borrow money in Australia will undoubtedly also see a bit of an uplift. It will also lead, in all likelihood, to a further strengthening in quality property prices in Australia, and of course, just general growth throughout the Australian region. So watch this space. We will be providing regular updates on the RBA, but sadly, no rate cut just yet. but fingers crossed we see one in the first half of 2024. Thank you for tuning in. Any questions at all, drop me a note. Remember to subscribe, and thanks for tuning in.